Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we dive in, a standard disclaimer: nothing here is investing advice. Do your own due diligence. And today's guest is the CEO of Miles Franklin Precious Metals, somebody we always love speaking to here on the show. It's Mr. Andy Schectman. Welcome back.
Good to see you, buddy. Thanks for having me. I appreciate Jesse. And last time we were together in Vancouver, and I will look forward to seeing you there again this coming winter. But in the meantime, it's certainly nice to see you over the computer and good to be back. Thanks for having me. I appreciate it.
Yeah, I appreciate you coming on the show once again. And since it has been a while since we spoke, I wanted to start with a broader question, and that is, what are you paying attention to the most right now when it comes to the global economy, monetary system, and financial markets?
Well, for me, I have been following a narrative for the last really over 3 years. And I started talking about the BRICS long before it became popular to talk about in this industry or even in the mainstream. And I have been watching this coalition of countries join together against the Western hegemony, against the Western sanctions. And to me, it is I don't know, to me, it is the bouncing ball. It is really the one really important, newsworthy, completely accelerating trend that I think before it's all said and done will have perhaps the greatest impact on the United States. You have what amounts to 25 countries that have either expressed interest in joining the BRICS bloc or have outright applied, from Afghanistan, Algeria, Argentina, Bahrain, Bangladesh, Belarus, Egypt, Indonesia, Iran, Kazakhstan, Mexico, our neighbor to the south, Nicaragua, Nigeria, Pakistan, Saudi Arabia, the linchpin of the dollar hegemony, Senegal, Sudan, Syria, United Arab Emirates, our ally, Thailand, Tunisia, Turkey, Uruguay, Venezuela, Zimbabwe. The list goes on and on. And now we see Macron from France request a invitation to the new BRICS summit in South Africa, where James Rickards has publicly told the world, and I've been talking about this for 3 years, what he told the world, that they have every intention of issuing a commodity-backed currency this August at this meeting. He's gone as far as saying on August 22nd, expect to hear an announcement of their new currency. Now, if we take a step back to 2019, when the BIS, the most sophisticated bank in the world, reclassified gold as the world's only other tier one reserve asset next to US dollars, you can understand why these countries that are joining BRICS are massively loading up on gold, why the central banks of the world have bought more gold over the last 18 months than at any time in history, why it was the biggest first quarter acquisition of gold by the central banks in history, because it is the foundation of what comes next. So for me, everything else, Jesse, is just in the periphery. It's noise. The trend, as far as I'm concerned, is of global de-dollarization and a drive against the Western sanctions, the Western suppression, the Western perception of hypocrisy, and the Western hegemony. And I don't think we've seen anything yet. So for me, this is what I am focused most intently on, although there are so many things that we could talk about, from the banks to the economy, to the geopolitical event, to the political event. But to me, this is where the real interest is, at least from my perspective.
So the counterpoint to the BRICS nations coming together, forming a new currency based on commodities — some people are saying a basket of commodities, some people are saying mostly gold — is that people point to the fact that they don't even necessarily trust each other. And they say, could you even trust Putin? Could you trust Xi? Could you trust Modi? And that the BRICS are more of a loose collection of countries as opposed to a real organization. So do you think they're actually going to be able to announce the launch of a new currency here at the upcoming BRICS meeting? Do you think this is something that could actually be released and implemented soon? And what would you say to those people who are kind of dismissing this whole BRICS alliance as just kind of political theater?
I think that that is very, very, very foolish as far as I'm concerned. You look at Russia, China, Brazil, and India, you have over 30% of the Earth's land mass and the related natural resources just from those countries alone, not to mention over 50% of the wheat and rice production, over 15% of the global gold reserves. When you talk about China, Brazil, India, and Russia, you have over 3.2 billion people, or 40% of the Earth's population. We're not even talking about the Belt Road Initiative, by the way, 151 or 2 countries, 75% of human population. We're not talking about the Shanghai Cooperation Organization. All these countries are melding together. But go back to your point. China, India, Russia, Brazil, you have a combined GDP of 29 trillion, or 28% of the global GDP. Just these countries alone, not to mention Russia and China, two of the biggest nuclear arsenals in the world. And now to your point, first of all, this is an entity that should not be taken lightly. Their GDP by conservative estimates will outpace that of the G7 countries as soon as this next year by a slight bit. But when you talk about trust, right? What better way to roll out distributed ledger technology, a new central bank digital currency, by showing the veracity of the basket of commodities that will be pledged to the new system? So giving everyone equal footing. As an example, the way that they run their presidency in the BRICS, it rotates year after year after year. This year it's in South Africa. Next year will be somewhere else. The point is, I believe, when you look at what they're doing, for example, I'm going to answer this question a little bit convoluted or a longer way, but I think it needs it. Look at what China's doing. They're going into countries and building roads and bridges and maritime channels and ports and oil refineries and gold mines, and they're building infrastructure. They are doing so in a mutually beneficial way. They've gone into Iran and Saudi Arabia and have struck a deal. They have brokered a peace deal. After hundreds of years of hatred, they are now building embassies in each other's countries. They've brokered the first ever railway between Iran and Iraq. My enemy's enemy is my friend. And I think they realize that cooperation needs to happen. But to your point, how do you trust? Well, you trust by using commodities such as gold, the immutability of gold, and show its veracity and its immutability on a distributed ledger. And if you want it to work, you have it audited, you have it open and transparent. And as Zoltan Pozsar has eloquently said over and over and over and over again, we are entering Bretton Woods 3. A period of time dominated by transparency and commodities rather than an opaque debt-based system. And so I think they have as good of a shot of it working as the naysayers say not, and maybe even a much better shot, because I think all of these countries realize that if they want to break free of the Western hegemony, this is the way they do it. They pledge commodities to a distributed ledger technology, to a new central bank digital currency. And all you have to do is look at the success of the digital yuan, which has been active now for well over 4 years. And they can use the rails of the yuan to be the backing of the new digital BRICS currency. And the commodities that each one of these countries pledges to the system give them equal footing at the table. Equal say, where not one country dominates the narrative, but any country that is part of the BRICS Union will have equal say at the table because they have ponied up commodities backing the system for the whole world to see with veracity, where it will be different than the previous system. Right here, when Roosevelt confiscated gold was redeemable. You could bring your $20 certificate in right here, and you could convert that into a $20 gold coin right there. It won't be redeemable this time. And I think the reason is that de Gaulle from France proved that convertible currencies convert, but it will be backed. And the whole beauty, I guess, in this case, of the central bank digital currency, of the distributed ledger or blockchain technology, is the ability to show the veracity of what is pledged to the system. And if they do it right, with transparency, have allow auditing to take place on what is inside the system, you have a very, very formidable foe in just about every way. And as James Rickards talks about in his latest piece, if they take the opportunity to build a bond market where they incentivize all of the BRICS countries to invest in their new fledgling bond market, kind of the way that the US did during World War II, buy war bonds to build a robust bond market on top of a commodity or gold-backed currency. Very quickly they go from just a interesting idea to a very, very big challenger to the dollar. But all of this really, to me, boils down to the fact that Saudi Arabia has not only joined the BRICS, as well as all of the OPEC producing countries. They've joined, the Belt Road Initiative, pardon me, and all of the OPEC producing countries. They joined BRICS. They joined the Shanghai Cooperation Organization, which is 60% of the entire Eurasian landmass, 40% of global GDP, just right there with the Shanghai Cooperation Organization. And then you end up adding on to it the BRICS New Development Bank. You have the linchpin of the dollar hegemony moving so far away from the West, it's unbelievable, a country that's going green, the US, into a system which represents close to 85% of human population that is not going green. And if they flip the switch and break away from the West and say we're no longer taking dollars for oil, everything gets really, really, really interesting very, very fast. So yeah, I think this is more than a fly-by-night type of deal, like, for example, the euro, where countries didn't trust each other, worked in different capacities, had different cultures, different lifestyles. But this time they're using a commodity and a blockchain system to show the veracity, the immutability, to make it be the glue that makes this whole thing stick.
Well, talk to us a little bit about central bank gold buying here, because you mentioned the BRICS nations are accumulating gold. If that is tied into this new BRICS nations currency, that makes perfect sense. But we're also seeing non-BRICS nations and countries around the world accumulating gold. We're seeing Singapore, we're seeing the Czech Republic, just to name a few. It's a whole laundry list of people. Charles Gave wrote an article recently where he said that gold will be one of the main trading instruments between nations in what he sees as a monetary shift up ahead. So do you think these non-BRICS nations' central banks also accumulating gold is because they see the writing on the wall, they see a shift coming, and that gold will once again play a major role when it comes to international trade?
100%. I believe that to be the case 100%. I mean, look, why did the BIS reclassify gold in 2019? Why did all the central banks, the German Bundesbank, the Bank of Austria, the Dutch National Bank, the Bank of Hungary, Turkey, Poland, the Czech National Bank, why did they all repatriate their gold from the Bank of England and the New York Fed? Why have the central banks bought more gold in the last 18 months than at any time in history? Why did they buy more the first quarter this year than at any time in history? You mentioned Singapore. They are number one on the list this year, right behind Turkey, who was number one last year. Look at the amount of gold imports or exports, rather, out of Switzerland. Again, this month, number one, China, number two, India, number three, Saudi Arabia. These countries are massively accumulating gold, and not just the countries that have applied to BRICS or the members of BRICS. But yeah, I think that what gold represents is, truthfully, will be a cornerstone to whatever new system arises. I think that it's very difficult to get people to drink the Kool-Aid again after the mismanagement of the dollar as the world reserve currency. And what gold represents, not only to the BRICS, but I think to all of the central banks, is stability. It is a tether to the fact that politicians throughout all of history have chosen inflation over austerity, and you will not be able, I think, to issue a new system if it is not backed by something. So yeah, I think this is real this time. The most well-funded, well-informed and influential traders on the globe are showing us this. They are massively accumulating it, and if the price alone was indicative of the value, not only would I ask why are the central banks buying it the way they are, but I would also ask who the hell is bleeding down the world's exchanges, whether you're talking about the COMEX, which is showing the lowest level, the second lowest level of silver in the history of the exchange, and gold being bled down as well, even more on a percentage basis. Look at the London Metals Exchange. Look at the Shanghai Gold Exchange. You are seeing massive, massive deliveries of both gold and silver off of the exchanges by not only the most well-funded investors on the planet, but the most well-informed. And when you draw down supplies from COMEX and LBMA, it's more than just saying they're taking delivery. It's incredibly sophisticated. It is not an easy thing to do. And when you leave those ecosystems as a big institutional buyer or industrial buyer, you lose all industrial liquidity. It is a one-way ticket when they leave the COMEX, when they leave the LBMA. These are one-way tickets. Just a couple of weeks ago, we had the largest one-day withdrawal of silver ever off the Shanghai Gold Exchange. This is not just a Western phenomenon. You're seeing globally a drive to accumulate gold and silver and to use the suppression, the Western suppression of price, to run cover for the massive and rampant acquisition. So yeah, I think this time it seems a little bit different to me.
Well, talk to us about silver now and what you're seeing on the COMEX with inventories being drawn down, and also your thoughts on potential continuation of manipulation of the market. You know, we've seen a dip in the silver price and coinciding with what seemed to be the unloading of paper contracts. What are you seeing there, and how significant is this that we're reaching such low inventory levels of silver in the COMEX?
Yeah, well, I mean, if you look at, for example, if you look at, I was looking last week. I had surgery last week, and so I was laid up for a while, and so these numbers are a week old. But for the year, as of last week, there was about 13,000 silver contracts delivered that stood for delivery, or 65 million ounces off of COMEX, and that's a massive, massive amount. We had 240 tons of gold delivered since the beginning of the year off of COMEX, and as I was looking at it a week ago, I saw that over the previous 7 days, 55 tons of gold had been delivered over the previous 7 trading sessions. This is a rising tendency. We've seen recently BlackRock purchase $175 million worth of PSLV. And this is on top of a fact of a 237.7 million ounce deficit in 2022 in mine supply versus demand, the second annual deficit. When we look on COMEX right now, there's somewhere in the neighborhood of 27 million ounces in the registered category. Only 27 million. Those are the bars that back the contracts that are out there. And, there's, I don't know, 5 times as many contracts or open interest as there are bars backing the whole system. When you talk about 27 million ounces, sounds like a lot, right? Well, India imported 304 million ounces last year. The previous 2 months in what's called exchange for physical, where contracts on COMEX are exchanged for physical and delivered off of the LBMA, almost 250 million ounces. You look at the total number of ounces on COMEX right now, it's about 273 or 4 million ounces, of which only 27 million ounces are up for sale. The majority of it belongs to people who have no intention of selling. Over half of it supposedly belongs to JP Morgan and the SLV, largest silver trust in the world. There is basically no silver on an industrial wholesale level, really hardly anything available for delivery when you factor in the fact that the number of contracts written against the bars for sale are exponentially higher. This is the same thing the Hunt brothers noticed in 1980. At what point can you continue to naked short a market where if you get called for delivery, you're not able to deliver? I'm not saying we're imminent threat of seeing the COMEX collapse, but we're as close as we've ever been. And so, yeah, I think that silver is probably the most undervalued asset on the planet. In fact, just a couple of weeks ago, there was a report issued that came out by the United States Geological Survey Committee. It's a branch of the U.S. government, who said by 2036, they estimate that all in ground reserves could potentially be depleted globally. They came out and said by 2030, the majority of all the in ground silver in Mexico could potentially be depleted. And they went as far as saying it could be the first element struck from the periodic table of elements. And so you tell me, what asset has the duality that silver does in demand of both an industrial metal, massively used in a green and digital environment, hugely used in military, over 500 ounces in the tip of every Tomahawk cruise missile, uh, thousands and thousands and thousands of ounces in every ICBM. God forbid we ever start firing those off. But the need for silver in the military is something people don't talk about enough. And when you put military, industrial, and monetary into an asset that is depleting in nature, is coming out of the ground at 7 to 1, but priced at 84 to 1, historically 16 to 1 for 5,000 years. In every way you spin it, to me, it is the most undervalued asset on the planet, maybe the best investment. And I usually don't say gold and silver are investments, but by every single metric, supply, demand, in-ground supply, distortions in silver's relationship to gold, historically and geologically, in every way I look at it, I don't see a better place to put your money on the planet than silver. And I think many of the big investors around the globe who have been copiously accumulating it, methodically draining the exchanges, would agree.
Some very good points there. I'd like to pivot to the broader market now and get your thoughts there, because there seems to be the illusion that we're in some kind of eternal bull market, when the reality is a small handful of tech stocks are holding up the indices, the S&P and the NASDAQ. There's a whole mania around AI right now, that it's going to be the next big thing. And it feels kind of like the dot-com bubble, because of course, as we know, the internet did go on to facilitate untold innovations and be the next big thing, but that didn't stop all that bubble from happening. So what are your thoughts on what's going on in the broader market right now? Do you see a potential market crash up ahead? And what do you think? Is this a mania?
It is a mania. I mean, without the AI mania, the stock market would have been a lot more volatile, I guess you could say. I mean, underneath the surface, the majority of stocks, other than these tech darlings, these AI darlings, are only up a couple of percent year to date. And if I had to guess, I would say U.S. stocks face much more downside than upside over the next few months, as one big reason is that the banks and the proprietary firms have, I think, have not really factored in the lagging impacts of the aggressive monetary tightening by the Fed. And not only that, when you talk about the rebalancing that these 60/40 investment firms have to reallocate their portfolios, the biggest asset managers around the world. And there's rumors that over 150 billion in equities would have to be sold by the end of June, with the money set to flow into bonds driven by rebalancing. And this is according to analysts at JP Morgan, just came out the other day. They were talking about this rebalancing effect, that they're going to have to sell a whole bunch of equities and move it into treasuries. And that would fit hand in glove with what the Fed is talking about. They're talking about issuing over $1 trillion, mostly longer term bonds issued by the Treasury. This is on top of close to $1 trillion in the Treasury bills that they've just issued to reliquify. I think it's called their GSA account. It's like the Treasury savings account. But this is all supposed to happen in the end of the third quarter into the fourth quarter, by over $1 trillion in issuance. So as these big firms and money managers and pension funds start to reallocate into their 60/40 split, you could see a big sell-off in equities and see it move into the safety of treasuries. It's the same thing we're seeing with the banks. Why are we seeing such massive outflows out of the commercial banks and out of the regional banks? It's because they're all moving into the safety of the treasury market backed by the Fed. and moving away from the systemic nature of the banking. And I would argue in this case, the potential systemic nature of the markets, the broader markets at large. So, yeah, I think we are certainly not out of the woods in terms of this new bull market that people are talking about. I think it's a very risky proposition, especially when you're able to get north of 5% on treasuries. It makes you really stop and think for a minute. Is it worth it risking a market with these fundamentals in this environment when you can get 5% with safety backed by the Fed?
So I want to pivot to CBDCs, something we always discuss in one way or another, because the IMF is working on a global payments infrastructure to ensure the interoperability of CBDCs. So I want to read you a quote from Tobias Adrian, a financial counselor at the International Monetary Fund. As money, CBDCs provide safety. As infrastructure, CBDCs provide interoperability and efficiency among private networks for digital money and assets. CBDC platforms are a direction well worth investigating. Now, it wasn't too long ago that the concept of a CBDC was seen as a conspiracy theory, and now it's just all out in the open, though most people in the general public aren't paying a lot of attention. Do you think they will ultimately succeed with launching and implementing CBDCs on a global scale? And could this new BRICS currency kind of provide a counterbalance or a rival currency to a CBDC being launched by European and Western countries?
100%. Look, the BIS said that every country has to have an operational CBDC by 2025. Kristalina Georgieva, the head of the IMF, not only said what you said, but she also stressed that CBDC should be backed by assets, and that cryptocurrencies, if they are not backed by assets, become speculative assets, speculative investments. And so, why are the central banks buying gold? Why did the BIS reclassify gold? You tell me. Are they going to issue a gold-backed Western IMF-backed system? I don't know. They published a report a few months ago that said gold as an international reserve, question mark, a barbarous relic no more. So, not only is the IMF talking about CBDCs, but talking about the interoperability of them, talking about the fact they need to be backed by something. This would fit a very close narrative to what we see with the BRICS. When I was asked this question in Vancouver when we were there by someone else who was interviewing me, she said, "Is there any way that the U.S. can stop this exodus out of the dollar, out of the Western system into this new BRICS system?" And I thought to myself, well, the only way they could do it would be to beat the BRICS to the punch and to issue their own backed central bank digital currency backed by a commodity. You must have some sort of tether, or it will be repeat of the same thing that we've seen over and over and over again throughout all of history. Go back to Roman times when they would cut the edges of the coins to pay their soldiers. And that's why you have ridges on coins, so that you would see if the coin was just basically cut around the edges just to save scrape off a little bit of silver, a little bit of gold, and make the coin smaller and smaller and smaller. Hopefully they wouldn't notice. That's why you see ridges. The point of it is that politicians have been doing this forever. If you don't have it backed by something, it ain't going to work. And I would argue that they're not going to back it 1-to-1. They may back it 10 or 15 or 20% of every new currency unit in circulation as a 10 or 15% backing to gold or other commodities. If we follow what the BRICS said, it could be a basket of commodities, but backed, showing the veracity of it and the immutability of it on a distributed ledger. You can make it work. It won't be convertible. It won't be 1-to-1, but it will be tethered so that when it comes to, for example, what the U.S. did over the last 4 years, creating more money in the history over the last 4 years in the history of the country preceding it. You can't do that. You're destroying the country. You are destroying the currency. And that's exactly what the Federal Reserve has been doing, not to mention keeping interest rates at their lowest level in the history of human civilization over the last decade plus. The distortions that created, I think the world realizes that if they don't have something backing a new system, that it's not going to work. And when you see Georgieva, the head of the IMF, come out and publicly say that in order for this to work, it needs to have backing. That's real. And of course, the report talking about gold as no longer being a barbarous relic, to me, that's real. Any reason why the central banks keep loading up on gold? That's real. So for me, that's how you make this work. That's how you make people feel a lot easier about a CBDC. Hey, don't worry, it's backed by gold and you can see it. And it gives it immediate legitimacy. Instead of taking our word for it, it gives it immediate legitimacy if it's done the right way.
Well, thank you so much for joining us today, Andy. Always a ton of fun to have you on. Always so much knowledge imparted. I really appreciate it. I know the audience will as well. Before I let you go, for those who want to learn more, could you tell us about Miles Franklin Precious Metals?
Yeah, we've been in business for 30, going on 33 years. We've done 9 billion in sales. We've never had a customer complaint. We're licensed and bonded, one of the very few companies in North America that are. It's a condition of our corporate headquarters being in the state of Minnesota, the only state in the United States that mandates licensing and bonding. We were appointed by Prudential Beige about 15 years ago, one of the 27 U.S. Mint authorized resellers. An honor we're very, very proud of. Our reputation, I think, speaks for itself. And we'd love the opportunity to work with your listeners. As always, of course, they can go to our website at milesfranklin.com or send us an email at info@milesfranklin.com for a larger volume price list, much more competitive than what our website shows, and any questions that you may have. And, please feel free to do that. And I respond to the majority of those emails myself if directed to me or one of my 14 brokers who it's interesting. I mean, everyone who works for me, literally everyone who works for me, I would consider friends outside of work. Most of them go back to Little League with me, go back to elementary school and high school. Some of my oldest, best friends in the world that I consider my family represent Miles Franklin. So we're one big, tight family, and we'd love the opportunity to work with your listeners.
Great. Well, I'll put a link to the website as well as the email below. Once again, Andy, really appreciate you coming on the show and definitely looking forward to chatting again.
Likewise, you stay well. Look forward to seeing you this winter in Vancouver. And if something arises before then, you know how to find me. Always happy to jump back on.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.